When foreign investors establish a company in Vietnam, one of the first operational decisions they make is hiring an accounting provider. And in many cases, the first question they ask is, how much does it cost? While pricing is important, experienced foreign investors eventually realize that cost is rarely the biggest risk. The real risk is hiring the wrong accounting provider. Because in Vietnam, accounting affects far more than bookkeeping. It impacts tax compliance, payroll management, annual audits, profit repatriation, licensing procedures, and the overall legal stability of the business. Unfortunately, many foreign-owned companies only realize the weaknesses of their accounting provider after compliance problems have already started affecting operations. Many accounting firms in Vietnam are capable of handling small domestic businesses. But supporting foreign-invested companies requires a different level of experience and communication. FDI companies often involve foreign shareholders, cross-border transactions, English reporting requirements, expat payroll, intercompany arrangements, foreign contractor tax issues, and more complex compliance obligations. An accounting provider without FDI experience may still complete basic filing work. But over time, hidden compliance risks can quietly accumulate beneath the surface. This is why foreign investors should approach accounting provider selection strategically, not administratively. One of the most important questions foreign investors should ask accounting providers in Vietnam is simple. How much experience do you have supporting foreign invested companies? Not all accounting firms understand the operational realities of FDI businesses. Some providers mainly serve local household businesses or small domestic enterprises. Others may lack experience handling foreign ownership structures, intercompany transactions, audit coordination, or expatriate compliance matters. A provider unfamiliar with FDI operations may unintentionally create accounting structures that later become problematic during audits or tax reviews. For foreign investors, practical FDI experience matters significantly more than generic accounting capability. Another common mistake foreign investors make is assuming the senior person they meet initially will remain involved after onboarding. In reality, some accounting firms delegate day-to-day work entirely to junior staff with limited experience. This creates communication gaps and inconsistent compliance management. Foreign investors should clearly ask, who will directly manage the account? Who reviews the work internally? And who responds when compliance issues arise? Because during audit season or tax inspections, the quality of the actual operational team becomes far more important than the sales presentation made at the beginning. Many foreign investors focus only on monthly tax filing when evaluating accountants. But strong accounting providers should also understand audit readiness. Foreign-owned companies in Vietnam are often required to conduct annual audits. And many compliance weaknesses only become visible during the audit process. This is why investors should ask, how do you maintain supporting documentation? How do you prepare clients for audits? How do you coordinate with auditors? And how do you identify potential compliance risks before audit season begins? Because accounting systems built only for monthly filing obligations often fail under professional audit scrutiny later. One of the most underestimated factors when hiring accountants in Vietnam is transparency. Some providers avoid discussing compliance risks openly because they fear upsetting the client. Others become difficult to reach when problems arise. This creates dangerous situations for foreign investors unfamiliar with Vietnam's regulatory environment. A reliable accounting provider should explain issues clearly, communicate proactively, and maintain transparency even when difficult compliance matters appear. Foreign investors should ask directly, how do you handle mistakes? How quickly do you respond to urgent compliance issues? And how do you communicate regulatory risks to clients? Because responsiveness and honesty often become more valuable than low monthly fees. Many foreign-owned startups in Vietnam initially operate with relatively simple structures. But as the business grows, compliance complexity also increases. More employees, larger transaction volume, cross-border payments, licensing expansion, investor reporting, or fundraising preparation. An accounting provider suitable during the startup phase may no longer be capable of supporting the company's future operational needs. This is why foreign investors should evaluate whether the accounting firm can support long-term business growth, not only current filing requirements. Because replacing accounting systems later can become operationally disruptive and expensive. Many FDI startups entering Vietnam understandably want to control costs during the early stages. But low-cost accounting structures frequently create larger compliance risks later. At first, everything appears fine. Reports are submitted, operations continue, management assumes compliance is under control. But during audits, tax inspections, or licensing procedures, hidden weaknesses begin appearing. Missing documentation, inconsistent records, poor communication, or accounting treatment that does not properly reflect operational reality. At that point, fixing historical compliance problems often becomes far more expensive than selecting a stronger accounting provider from the beginning. At LTS Law, we regularly advise foreign investors who encounter legal and operational problems caused by weak accounting structures. This is why we believe accounting provider selection should be treated as a strategic compliance decision, especially for foreign-owned startups and SMEs entering Vietnam. Although LTS Law does not directly provide accounting services, we help clients identify professionally assessed accounting and audit partners experienced in supporting FDI companies in Vietnam. We focus on providers with strong English communication capability, transparency, ethical standards, responsiveness, practical FDI experience, and the ability to support long-term operational compliance. Because sustainable business operations require more than filing reports. They require partners capable of protecting the company's compliance credibility over time. Many foreign investors only realize the importance of accounting quality after compliance problems begin affecting the business. But by then, correcting structural weaknesses becomes far more difficult. At LTS Law, we help foreign investors understand that strong compliance begins with asking the right questions before problems occur. If you are operating or planning to establish a foreign-invested company in Vietnam and want guidance on selecting suitable accounting or audit partners, book a consultation with LTS Law. Because in Vietnam, the accountant you hire today may directly affect the risks your business faces tomorrow.